Yeah, hello. Good evening, everyone. So, hope I'm audible and all the technical facilities are correct in your system. Could someone ping whether I'm audible enough in the chat box, maybe? Hello. So, good evening, everyone. So, I'm Ramakrishnan, Chartered Accountant. So, in this webinar, we will be going through the tax audit report, the latest amendments that has come, which is applicable from 2025-26 assessment year. So for the financial year 2024-25, apart from the audit of the financial statements, so the tax audit report has to be filed for the assessees, and we will see who are all it applicable to, and we will also see what are the amendments and extra disclosure requirements or queries that has been raised in the tax audit report that are now introduced. So as you can see, there is a new notification on 28th March 2025, and in Income Tax Act, notification number 23/2025. So by which these amendments have been taken into account. So before going further into the tax audit report, the changes, we'll have a quick glance on tax audit applicability. It is already known, but however, we will see one more time. So for business entities, if the total sales or turnover or the gross receipts for the business, if it exceeds 1 crores, then tax audit would be applicable. Only in case where the person has opted for 44AD, which is presumptive income basis, for up to 2 crores, 8% or 6%, as the case may be, they can they can compute the income under 44AD. So in such cases, tax audit may not be, is not applicable, and such limit of 2 crores is extended up to 3 crores if the total gross receipts, any receipt for that matter, is within 5 percentage. Then that limit is 3 crores. So I will again repeat. So first one, if the gross receipts exceed 1 crore, tax audit is applicable. But if the person is opting presumptive income under section 44 AD and the turnover does not exceed 2 crores, then tax audit is not required. And if the turnover does not exceed 3 crores and the total cash receipts does not exceed 5% of the total receipts, then tax audit is not applicable. Also, this limit, and then even though you have not gone through 44 AD presumptive income, if you are a normal business person and your cash transactions, both receipts and payments, are within 10 crores limit, within 5% of the total receipts and payments, then 10 crores is your limit. Excuse me.
நான் பேச மாட்டேங்கிறான்.
Okay. So next we will go to professionals. We have seen business entities. Now we will go to professionals. So when it comes to professionals, the Act gives few people as professionals like doctors, chartered accountants, chartered engineers, etc., film artists. Those people have been taken as professionals, and it is defined in section 44 AA also. So based on that, if you are a professional, then the tax audit is mandatory if the turnover, the gross receipts exceed 50 lakhs in the financial year. And similar to the 44, similar to the business entities, if for professionals, if you are opting 44 ADA, then for 75 lakhs, if the cash receipts is within 5%, then tax audit will not be applicable. So moving further, so if you are actually opting presumptive taxation under 44 AD, ADA, AE, and 44 BB, 44 BBB, all these sections, if you are opting the presumptive taxation, then you have to give the amount. You have to basic exam, that limit you should not cross. For example, under 44 AD, 8% or 6%, as the case maybe, would be the limit. If you wish to reduce the limit, if you are trying to give profits below that 6% or 8% limit, then you have to do tax audit under 44 AP. Also, once you opted out of that 44 AD, you cannot actually re-enter the scheme. Once you say my profit is lesser than 6%, you have to do tax audit, and you have to continuously do tax audit for 5 years. So this is in 44 AD. And similar to that, in 44 ADA, if you are declaring lower profits, then 50% is the limit. If you are if you want to show lower profits, then tax audit would be applicable. But you can see that such opting out of 44 AD for tax audit and cannot re-enter the scheme for 5 years, that implication is not in 44 ADA. So next thing is section 44 AE, which is assessee carrying on business of plying, hiring and leasing good carriages, who's a resident. If he does the assessee plying, hiring or leasing good carriages, then there is a presumptive income is applicable. And 44 BB is about non-resident, including a foreign company, a non-resident in the business of exploration of mineral oils. So they have a presumptive income. And 44 BBB is for business of civil constructions, certain turnkey projects, for non-resident, for foreign companies. In all these cases, there is a presumptive income as per these sections. If the assessee wishes to show lower profits below these below the thresholds given by the sections, then tax audit would be applicable for all those cases. So we have now seen the tax audit, like what are the applicability of tax audits. Now we will next go to the amendments, summary of the amendments that we have. So I will. This one is only a crux. We will go through each of these line items wherever it is required in detail also. So first one being, so if a person is carrying on a normal business and tax audit is applicable to him, apart from that he has some other presumptive income, etc. So that has to be disclosed in clause 12. So in Finance Act 2024, there is a new presumptive income that has been added for a special tax provision for non-resident operating cruise ships. And if it is a non-resident, and it is a non-resident including foreign companies, and if the person is operating cruise ships, 20% of the gross receipts that they take in India shall be taxed, shall be deemed to be the profit of the business. That is what Section 44 BBC says. If the company has, if the entity has any other like such presumptive businesses also, such applicability has to be disclosed under this clause. So usually in clause 12, all other presumptive income etc are to be disclosed, whether such any presumptive income is there under 44 AD, AE, AAF, 44B, BB. All those presumptive sections are to be disclosed. Along with that clause, now the Finance Act has added one more presumptive income, so the same has been added here. So this is first amendment. It does not have a major implication as such, but for those people who are operating, who's a non-resident and operating the cruise ship, those assessees, this would be applicable. And clause 19 related to deductions under various sections, 32 AC, AD, scientific research, etc. So these are the sections that got completely obsolete. For example, 32 AC got obsolete by 2015, and 32 AD got obsolete by 2020. Those clauses which got obsolete are being now deleted. So that there is no deductions to be claimed, and we are not claiming any deductions.
Right. Okay.
Just 1 second, I have to hold.
Very well.
அவன்கிட்ட சொல்லிருந்துச்சு நான் பாத்துக்கிறேன்ட்டு.
Yeah, sorry for the delay. So we will continue. So clause 12 we have gone through, and clause 19 is about removing the obsolete sections and deductions. And clause 21 is also clause 21A. They have added one more clause. Clause 21A is about amounts which are debited to the P&L account, which are to be disallowed, or otherwise which are to be disclosed separately in the tax audit report. In that we have the notification has added one more line item. And clause 22 is about disallowance of MSME interest and MSME late payments. One year back there was an introduction of section 43BH, which are disallowed late payment and late payment to MSME vendors. So that has been more rigorously disclosure requirements have been added in this through this notification. And clause 26 is about movement in allowability of the 43B sections, so that there are some corrections has been made to accommodate 43BH. So clause 22 and clause 26 is more about allowing to bed for the better disclosure of for clause 43BH. Okay. And clause 28 and 29 are sections which got absoluted, which got deleted in the sections, and those have been the corresponding uh, clauses also have been deleted in the tax audit report. And clause 31 ABC pertains to section 269 SS, which is loans from loans received in forms other than cash, etc. So those items have also been changed a little bit to accommodate more items. Okay. So, and clause 36 is about receipt of dividend is given here. We will explain it later what exactly the dividend is. We will explain it in full. I'll go to the next slide. So, which is regarding clause 21A. So, this is the amount debited to P&L. That clause we will be showing. So, in this, before going to the 10th clause, they have newly added. They have added the one new clause. I want to give a note on what the other clauses actually mean. From 6th to 10th, it goes hand in hand. It are very similar. So I want to give an explanation on what each item is. So the sixth item in clause 21A. So before the clause 21 pertains to those amounts which are debited in the P&L but are to be disallowed under section 37 or some other sections of the act, mostly 37. So those are to be given separately in this clause. For example, it has other things like capital expenses which are debited to the P&L, whether that has to be disclosed, whether any capital expenditure are debited to the P&L, it has to be disclosed. Any personal expenditure debited to the P&L has to be disclosed. It is under clause 21. Any advertisement in political party or clubs or club services that are availed, those are also to be disclosed in the clause 21. So on those lines, the sixth item actually comes to expenditure for any purpose which is an offense or prohibited by law by way of penalty or a fine or for violation of any law. So this one particularly states any violation of law. And I will read the seventh one also: expenditure by way of other penalty or fine not covered above. So they have given two distinct items. One is which is prohibited by law, and the other one is not covered by the above act. So for example, if there is a penalty imposed by any particular act enacted, whether it is in India or outside India, such penalties or fines which are paid on because the assessee has contradicted the law, then it would be in sixth item of clause 21. So if it is something contractual in nature, for example, some liquidated damages, if there are any liquidated damages that are to be paid by the company, such items are to be given in seventh item of clause 21A. If there is a contractual obligation, we have not met the contractual obligations as per the agreement, there are some liquidated damages that are to be paid. Such items are to be shown under seventh item. Now we have to note one more particular item under this. As per the tax audit report, this has to be disclosed, and it is to be noted that even though it is shown here, it does not definitely mean it has to be disallowed under the Income Tax Act when the returns are being prepared or when the tax computation is being prepared. So the seventh item simply puts, if there is a penalty which is not covered under above, it has to be shown here. So we can show it here, and the tax auditor usually has to give one declare or one qualification or one note in the tax audit report, which is 3CA or 3CB, stating that these are penalties and fines for not for contractual obligations, like that. If that person, the tax auditor, has to give a note such that it is noted and it is not implied that it has to be disallowed. So such distinction has to be understood, and then the same has to be entered. So any expenditure in consequence of violation of law, for example, FEMA or Customs Law Act or any other act, that has to be that cannot be taken as a deduction. That has to be disallowed in Income Tax Act, and therefore it has to be shown in sixth item. So, and one more point to be noted is late filing of TDS return or late filing of GST returns are not penalties in nature. Those are merely fees, and those need not be disallowed, or those need not be shown under this classes. So that is one more point I want to mention. So, and next we'll go to the next one. So the 8th, 9th and 10th item, these things are very similar. So the 8th item being expenditure incurred to compound an offence under any act, for example under RBI or under TDS or under Companies Act. There is an offence, and the company or the assessee has paid amount to compound the offence, whether it is in India or abroad, wherever it is. Such such amount paid for compounding the offences shall be given under 8th line item. So that is there. And ninth line item is expenditure to provide benefit or perquisite in violation of the law, regulation or guideline. So this is uniquely applied to all those persons, all the associates who are covered under a specific regulation or guideline. For example, let's say as per the pharma companies shall not pay some freebies or etc to any of the doctors etc. It is a violation of their code of conduct etc. So if such things are being violated, then such expenses are to be mentioned here. Benefit so if it is a violation of any particular law, then it has to be given here. It need not be only income tax or other financial finance related acts, but also other acts also. It has to be mentioned here. So that is the ninth item. So the 10th item is the new one they have introduced. So it simply is expenditure to settle the proceedings for contravention under a notified law, is what the notification says. Settle a proceedings is similar to compounding an offense. This has to be given the notification, or further notifications are to be given stating what are the specific laws it is notifying. It is pending for the pending or no other notifications has come to clear up this thing. So this is one more section whereby it could be similar to compounding, but if it is pertaining to a specified or notified law, it has to be separately shown here. So as of now, until further notification comes, this would be this will not be, it could not be actually complete, but we have to make a note of this. Okay. So that is regarding clause 21A and the new addition. So let's come to clause 22, which is regarding excuse me. Yeah, clause 22 is regarding MSME vendor payments. So earlier, the clause 22 had two line items. One is amount of interest inadmissible under section 23 of MSME Act. So as you may already know, for MSME, if there is a late payment to any of the vendors, it is the obligation, it is the it is mandatorily, the interest also has to be paid to the MSME vendors. Such interest amounts are to be disallowed under the Income Tax Act also. So that is there, and that is being retained in the new clause also. And the second clause was introduced when the 43BH has come. So that has been the disclosure point of which has been expanded now. Earlier it said any amount not allowable under 43BH. within the current year. If it is not allowable, it has to be disclosed here, is all it says. So that is there. Now before explaining to that second clause and third clause that has been amended, now we will just go through once on we will just go through once on the 43BH. So in section 43BH, payments due to micro or small enterprises beyond the time limit under section 15 of the MSMED Act are deductible only in the year in which they are actually paid, is what section 43BH says. So section 43B generally talks about those amounts which can be claimed as a deduction only at the time of actual payments. So this has been added and said that if there is a payment to micro or small enterprises, then it has to be paid within the time limit under section 15, which we will come later. If not paid, when it is actually paid, then only we can actually take the deduction, is what the section says. So let's see what micro enterprises or small enterprises. As you can see in the screen, if the investment of those entities are less than 10 million and turnover is less than 50 million, then it is micro. When investment is 100 million and the turnover is less than or equal to 500 million, it is small enterprises. So if these are the cases for MSME, these are the micro and small enterprises. And for these entities, yeah, for these entities, these are the due date for making the payment. For within, if there is an agreement, if there is an agreement already exists, due date as per the agreement, or 45 days from the date of acceptance of the services or goods received, whatever it may be. So day of acceptance means if you have a vendor who is a MSME, who is a micro or small enterprise, then within 45 days or as per whatever the agreement is, we have to make the payment. So if the day of acceptance means when you got the service or when you got the delivery of the goods is the day of acceptance. And it has to be reputed within 15 days, whether if we are not accepting, it has to be given, or it can be deemed as we have accepted. So that is there. And if there is no agreement within 15 days of the acceptance, we have to make the payment. So this is the time limit under section 15 of the MSME Act. So if the payment is not made within the stipulated time limit under section 15, section 16 of MSME Act will apply, and the interest has to be computed at 3 times the RBI bank rate, and it compounding monthly. Even though the agreement says otherwise, also such amount would be such interest shall be it shall start running. And for companies, there is a MCA has regulated it, and they have to file a quarter for half yearly returns in March and September, saying that how much of the MSME amounts are due, etc. is there. So such implications are already there. Apart from that, income tax also says such interest also has to be disallowed. So if there is a delay in payment, it is seriously they are taking these things. So if there is a delay in payment, interest has to be charged, and such interest are to be disallowed, and such interest shall be mentioned disclosed in clause 22 of the tax audit report. So that is the first one. We have seen that. Now coming to the second and second thing. So total amount required to be paid to MSME are to be given. This is a disclosure, more of a disclosure requirement. So to comply with this clause, every entity now has to prepare a list of all the expenses incurred by it during the year to micro and small enterprises. Not because for internal purposes, whether they do keep or not is different, but as per act, they are asking for a disclosure like this. So the tax auditor will be asking for such payments, all those payments under that are to be made to micro or small enterprises. There shall be a list of all the expenses, and we have to make sure that those are micro or small enterprises when there is a vendor onboarding. And we have to, as already mentioned, if there is a MCA complaints also is there for making half-yearly returns on MSME payables. So for all these purposes, it is now becomes a mandatory to have a list of all the expenses during the year. So that is the total amount is to be disclosed under clause 22 subclause 2. And now they have given the subclause 3 has two parts. One, paid up to the time given under section 15 of MSME Act, and B is not paid up to the time given under section 15 and inadmissible for the previous year. So this is the disclosure they are expecting, and I will explain it with an example. Let's say we are the assessee and we have a MSME vendor, only one MSME vendor, and the total payables or payments during the year is 1 lakh rupees. We can have it as four categories. One, which is paid within the due date, and paid during the year, 50,000. So such amount is allowed under Income Tax Act because it is within the due date and within the in the year itself we have paid, then it is allowed. The second one is not paid within the due date and paid during the year. For example, let's say 10th of April 2024, we have purchased some goods from a micro enterprise, and we have paid him in, let's say, 1st of January 2025 only we have paid. On one part, there will be an interest cost to it, and it has to be disallowed, that is disclosed separately. But on the other part, whether it will, with this amount of 40,000, whether it will be disallowed, no, because we have anyways paid this within the year, so that is also allowed. And the third category is not paid within the due date and not paid during the year. And the same example, 1st April or 10th April, I am purchasing some services or goods from a micro enterprise, and I am not paying it within 31st of March. So it has exceeded the due date and we are not paid within the year. So then the 5,000 amount that also that will be disallowed. And the next one would be paid within the due date and not paid during the year. So we have paid within the due date, but it's not paid during the year, which means like so how to in this, like 1 second, within the due date and not paid. Yeah, so paid within the due date means like let's say we purchase something on 31st March 2025, and within 15 days, which is like which is 15th of April, but we paid everything in 10th of April itself, means that is paid after the year, but still it is paid within the due date, then that can be taken as a deduction. So that is what this is what crux of the 43BH. So whatever is paid within due date and paid during the year or not paid during the year, if it is paid within the due date and the expense is booked, then we can take. If it is not paid within the due date but paid during the year also, we can take the expenses. If it is not paid within the due date and if it is not paid during the year, then we have to disallow that amount. So this is what the section says. So how to classify this in the next one. So if you see here in clause 2, subsection 2, total amount required to be paid to MSME during the previous year is 1 lakh. That is the total amount we have mentioned. So, and paid up of the amount referred in subclause 2, amount paid up to paid up to the time limit given under MSMED, it will be in first one and the fourth one. Both are paid and both are paid within due date. Both are paid within due date. So here also they are asking for what are the items that are paid within the due date. Section 15 is the time limit or the due date. So both those things can be have to be shown here, 50,000 and 5,000. And in third clause subclause B, of the amount not paid under the due date and inadmissible for the previous year. So if you see here, not paid and inadmissible for the previous year. The second clause is not paid within the due date, but the same is paid within the paid during the year. So that is allowed, and that need not be shown here. The only thing to be shown here is not paid within the due date and not paid during the year is the amount that we have to show here. So this is the implication. This is the disclosure requirement of clause 22. And after clause 22, we are going to clause 26, which actually goes in together with clause 22 regarding that, because of the 43BH, because that is the change also they have given. So earlier, whatever the amount which are disallowed, the allowance and disallowance pertaining to section subsection A to G is the amount, what you say, is what they are disallowing, is what we have to disclose in this clause. But now, since if you see here, amount, this is only about this is only talking about the transactions during the year. What about the amount that has been disallowed in earlier year but are to be allowed in the current year? That is not covered here. So such items are to be shown here. For example, pre-existed on the first day of the previous year and allowed paid during the year. For example, this 5,000, the third line item, if it is paid during this, out of this 5,000, if it is being paid during the current year, then such amount are to be shown under this one, like paid during the previous year. So that is there. And here was incurred in the previous year and was paid on or before. So this is for transactions within the same year. This clause is given, and this is for pre-existed items. So pre-existed items, 43BH has to be given. For expenses incurred during the year, 43BH should not be given. This is what the implication is. Earlier, it was 43BH was totally not there. In current scenario, in clause A of 43, clause subclass A of clause 26, 43B details are to be given. In subclass B, 43BH details are need not be given. So this is the implication. So these are two clauses, clause 28 and 29 of the tax audit report. It talks about without consideration or inadequate consideration, shares has been received, or shares has been issued at a premium for more than the fair market value when there is a closely held a company, etc. These things have been omitted from the sections also. Section 56 to 7A and 7B are removed as per Finance Act. So consequently, these clauses, the disclosures are required also, have been removed. So next thing being, next thing, clause 31A, B, and C. So clause 31A, B, and C talks about loans or deposits received by any company in form other than cash. So clause 269. One second. Yeah, clause 269 SS talks about loans or amounts, any deposits received or specified sum received. Specified sum means any advance received for the purpose of like selling of any, transfer of any capital assets as defined by the section 269 SS. So such amounts are to be such amounts are to be received in modes other than cash if it exceeds 20,000 rupees. So the restriction applies if the amount of loan deposit or specific sum is 20,000 or more. And if it is what is it, like if it is a repayment also, it cannot be more than 20,000 if it is being paid in cash. We have to, the assessee has to opt to account pay check, account pay bank draft, or ECS, or other prescribed electronic modes. So this is what the act says as such. So such things, 269 SS does not apply to loans given given by or accepted from or accepted by the government, banks, corporation established in the act. Those things it is not applied. It is applied to normal companies and associates, firms, individuals who are doing the business or profession. So the earlier the clause was simply saying amount of loan taken or deposit accepted. That is all it said. And whether it is accepted in what is the mode of acceptance other than cash. For example, if you can see here, so this drop down list that is on the right side That is what they have already given, whether it is received in bank, draft, beam, which is UPI, check, credit card, debit card, ECS, NEFT, IMPS, whether in these modes, whether these loans have been received or no. That was the only option given earlier. So now they have added a few more line items. If it is no, then whether it is paid or received through cash or non-account pay check or journal entry or conversion of assets or liability, these are other modes of extinguishing or of getting a loan, or other modes of getting extinguishing a loan or or deposit. So it has to be clearly shown now whether it is what is the mode of transaction under which the 269 SS has happened. So it applies to both loans taken or specific times taken, and repayment of such loans and line items, and each of the line item has to be separately shown, like whether it is paid through cash or it is adjusted through journal entry, like that it has to be separately shown. And so this is the last amendment in the tax audit report. So they have added one new clause, which is clause 2036B, to mention the amount received for buyback of shares. So when talking about buyback of shares, as per the Finance Act latest amendment, which is applicable from 1st of October 2024, when there is when a company buybacks its own shares, the total consideration amount which is paid to the shareholder is to be considered as a dividend under section 222F. So that is what the new amendment says. This is by Finance Act 2024, and it is applicable from 1st October 2024. So any buybacks after 1st October, the total buyback consideration amount is to be taken under section 222F. And to give more understanding of this, earlier when there is a buyback of shares, it was taken, the buyback amount is taken as sales consideration, and the amount of the acquisition value of the shares are taken as a cost of acquisition, and it was taxed under capital gains. Now the same has been changed, and it has been brought under income from other sources. So the buyback amount consideration received by the assessee for the buyback amount is taxed under income from other sources, and the cost of acquisition of the shares becomes a capital loss in capital gains, short term or long term capital gains, and accordingly it can be used to set off against other capital gains or losses. This applicable to those shares bought back after 1st October 2024 only. Yeah. So these are the changes that has been brought in by this notification. I'll just go through the summary once. So addition of one presumptive income, and deletion of obsolete section numbers under which deductions are to be claimed. And 21A, even though it is notified, it has to be still cleared cleared up by the law or any further notifications on what are the items if we are settling other proceedings, and under what laws we have to present it separately. And we have talked extensively about MSME interest being disallowed, and what about the 43BH implications. One thing that I want to remind everyone is on the 43BH is about for other sections in 43B, like interest paid to any banks or companies, or ESI employee deduction. So those things, those can be claimed as a deduction if it is paid within the due date of filing the return of income. But such a facility, is not applicable to 43BH. For example, if you are not paid within March, then that's all. We cannot take the deduction. But for other subsections in 43B, such if it is paid within the due date, then it can be taken. And 43B, the clause 26 also we have seen. In one place the 43BH is to be disclosed, and the other place 43BH should not be disclosed, and two sections being removed. And 269 SS based on the changes. How it has to be disclosed. There is a increased disclosure liability now, so that we have to see, and receipt of dividend under section 222F. So this is about buyback of shares. So these are the disclosures. So that's all from my side. I will now open the room for questions. Just 1 second. So I think you can unmute yourself now, and if there are any clarifications, we can have the discussion.
Sir, good evening.
Hello, sir. Hey.
My name is Jagan.
Yes, sir.
The clause number 21A, which you explained,
Yeah.
the 6th and 7th clause, is this the new addition, or it has been there
Sir,
even in the old term?
there is only one addition, sir, which is clause number 10. And that also under which acts such settling for settlement we have to disclose, that is yet to be notified. So 6, 7, 8, 9 are already there. Only clause 10 is the new addition.
Okay. Because the penalty generally under disallowance being offered under income computation, you will disallow only what is penalty paid under Income Tax Act, correct? Any other act, generally we don't disallow. Is my understanding right?
No, sir. Even if there is a penalty imposed by GST or any other act, also that has to be disallowed.
Even before,
Yes, sir.
it has to be disallowed. So any penalty is not allowed as a business
Any
expense.
any amount which is a penalty, which is penal in nature under any of the acts, has to be disallowed. It even if you see the act, if you see the section, it would say whether it is enacted in India or abroad, also it will get disallowed.
Okay, all disallowed has to be disallowed. Okay.
Yes.
And then as far as interest is concerned, 201 interest, we disallow and do we disallow under income tax computation? Interest paid under 201.
Interest on income tax is definitely disallowed, and interest on TDS, that is also disallowed, but that has to be disclosed under clause 34, which is under like the TDS, that table we have itself. There is clause 34. Under
So
that we
that
have
should also be disallowed. That
yes,
is not allowed.
that is not, that is also has to be
Because
disallowed.
it is coming under the nature of income tax. Am I right?
Yes, sir. Yes.
It has to be disallowed.
Yes.
And even for 40, this thing, even for MAT calculation also, it should be disallowed.
Yes, sir.
Correct.
All the interest under income tax has to be disallowed.
And in addition to that, this interest paid to MSME companies also is getting disallowed.
Yeah, that is also disallowed under different section and different clause that we have seen now in clause 22. So, yeah. Yes, sir.
Okay. And do you expect any guidance note to be rolled out by the institute for the amendments that have come in?
We wish we have checked for any FAQs or any guidance note. We could not find any. So these are there are few clarifications only there, but such guidance notes there are. I could not find anything. This is
Okay.
purely based on the understanding of the notification received and
Okay.
comparing with the whatever the act has previously said.
Okay. One small help, really helpful if you can share this presentation with us.
Yes, sir. I will check and possible I will share it with everyone. Yes.
Because whatever we you discussed, it will be nice if we can go through the document again.
Yes, sir. Sure. Sure.
Anyway, the recording will be available. So along with the recording, if we have the document, it will be easy for us to follow.
Yes, sir. I will arrange for that. Yes.
Thank you so much.
Thank you, sir.
Thank you.
Uh, mm, Is there anyone else who has a doubt? Okay, thank you, everyone. I think there are no doubts anymore. Like, there are any doubts? If you are not able to chat, making maybe unmute also, you can put it in the chat. We will wait for 5 more minutes.
Sir, I have a doubt, sir.
Yes, sir.
Sir, recently even cost accountants can do tax audit. It is the recent this thing. No, how it will affect chartered accountants?
Not exactly sure about how it would affect the chartered accountants. I'm not very sure about it. Like, I don't think this is the platform to discuss that. Also,
Okay.
we can discuss offline. So,
Okay, fine. Fine.
Yes, thank you, Ramakrishnan. It was a wonderful efforts what you have made, and you are very clear in explaining the the various amendments in the tax audit. If any one of you have any doubts, kindly you can unmute yourself and ask.
thank you everyone for attending the webinar. So, we'll continue it in the next week. So, thank you.
Thank you.
Yes, thank you.